So, an ugly day on the local market. Earlier I spoke to Martin Lakos from Macquarie Private Wealth. Martin Lakos, thanks for your time.
Always good to be here, Phil.
Well, it wasn't a pretty sight on the market today. How significant a capitulation is it in your view?
Well, it's a good word. You know, down 100 points. We closed barely 6 points off our low, and really we couldn't do much better than that. Even through our day's trade, the concerns on the US growth really was foremost of market investors' minds. Most notably also, it didn't help to have weak retail sales numbers, down 0.1%. Not a large number in itself, but expectations were actually for a modest rise. And clearly department store sales and restaurants not doing well. Slightly better expectations out of food and footwear. But the thing that came out on the data today for Australia was that the export volumes were higher than import volumes. That may augur quite well for second quarter GDP growth, but there's a lot more out there that's concerning markets. And at the end of the day, it's all about that US growth issue. And with that, you know, that ISM data that came out, that manufacturing data, you know, it was really quite concerning. I guess we have to put in perspective to some extent though, Phil. US manufacturing is still in positive territory at 51 points. Aussie ISM is at 42. So that tells you a lot where one part of our market is not performing.
So when you head to work tomorrow, what are you expecting to see on the markets?
Well, look, it's hard to predict on a day-to-day basis. At the end of the day, you know, we've had 6 falls out of the last 8 trading days. We're down 5.5% since the 22nd of July. So we've had really big falls, and markets have absorbed a hell of a lot of negative news out there. And when you think about this year, starting with the floods in January, the Japanese tsunami, all of those debt issues in Europe and the US, and slowing growth concerns in China, you know, there's been a lot already discounted in. So there's definitely some value emerging. And I guess when you look at stocks like Westpac, on our forecast anyway, on a 2012 dividend yield of 8%, plus franking, that starts to look very attractive. The concern for some investors is going to be, particularly in the industrial space, is whether in fact there's a value trap. In other words, stocks look cheap on PEs and other valuation criteria, but because earnings will continue to decline, they're not actually cheap at all. So we've got to be watching that very, very closely. We remain very positive about the resources outlook. And in fact, commodity prices in the bulks, iron ore, coking coal, steaming coal and copper, have all actually been holding up pretty well so far. I just thought I'd put in one note. It's really quite interesting now, Phil. The Australian 10-year bonds are at 4.65%. Our cash rate at 4.75, so we're at a flat, if not an inverse yield curve. So no wonder the share market is doing what it's doing here in Australia, because short-term rates are higher than long-term rates, and that's not normally good for industrial stocks. I thought I'd also just touch on the outlook for the earnings season, if I may, in as much that we conducted a survey between May and July of a number of chief operating officers and CFOs of the ASX 100 stocks. Not every single stock, but quite a number. It was not to get quantitative analysis, but more qualitative. And clearly what they're saying to us is cost pressures are rising. They're seeing their top line growth, so revenue growth, really a tough environment. Not so concerned about wages costs, but there's absolutely no doubt that productivity has been flagging. And there's no doubt that things like red tape and utility and regulation charges are increasing as well. So that means that the outlook for 2012 probably has got to come down. Analysts currently predicting 20% earnings growth across the broad market, the bulk of which is coming from mining. If you extract the industrial side, that number has to come down, and we're going to be looking towards the reporting season, which well and truly kicks off tomorrow with Rio reporting, to see that the outlook statements from Australian companies will probably be fairly subdued outlook for 2012.
Okay, thanks Martin Lakos.
My pleasure. Thanks, Phil.